Sure. Thanks.
Yeah.
Okay.
So we were discussing with the particular entry where we had the furniture, and brought down part we got to know how the furniture is asset, meaning that the asset is nothing, always a debit balance. The asset is always a debit balance. Give me 1 second. I'll just bring out the chart again. Here it is. So asset is always a debit balance. So debit balance means the brought down is in the debit side. So on that concept, we first of all put the brought down in that side. Then what we did was we have already passed a entry adjustment entry for that particular transaction, which is depreciation account debit to furniture account. Now we are posting this entry. To that ledger, particular ledger. Here furniture account is being credited. Now, definitely because of that, we will post that entry in the credit side of this entry. The particulars of that will be the other aspect of the journal entry. Do you remember that concept?
Okay, yeah. By depreciation
By
account.
depreciation, yes,
Okay.
perfect.
Okay.
By depreciation, the amount is 725. So if I balance this account now, if you remember the steps of balancing were, first of all, find out which side is higher, then here debit side is higher. Put that higher side total in both the sides. That was the next step. So I'm putting the higher sides total in both the sides. Then I'm calculating the differential amount in the lower side so that the total will match. How do I do that? I'll just simply do this minus this, which is 6,225. So this is basically nothing but a revised balance for that account. Are you getting why I'm using revised balance? Because we already had a balance in the trial balance. Then we took the effect of the adjusting entry. Then we're finding a revised balance. Does that make sense?
To make trial balance equals to 0, right?
Not necessarily. We are not making the trial balance 0 here. We are just accommodating the adjustments here. So I have already told each adjustment is nothing but a transaction. The only difference is here these transactions are not yet recorded in the books. So what we do is we take those transactions, see what is the journal entry for those, and post those journal entries to the balance of the accounts which are involved in those entries. Just like we did.
We are doing this adjustment as a what if kind of scenario, or like trialing, like, okay, we will adjust this amount going to impact on the balance sheet. Is that we are trying to do it over here? The adjustment, whatever we are able to see on the left hand side under example 17.
We are actually solving the example 17 only. Now,
right.
to answer whether it's a what if thing or to show the, I would say it is we are doing it to show the correct picture. So it's a very simple thing. I'm just simple points. Okay, you prepared the trial balance. So before trial balance, you have posted all the journal entries, then created all the ledgers, then you created the trial balance, right? However, after creating the trial balance, you got to know there are 5 transactions, those are not entered. After the trial balance, you got to know that there are 5 transactions, those are not entered yet. Those are called adjustments. Now what we are doing is we are preparing journal entries for those transactions separately, and we are posting those transactions to the accounts, respective accounts, and we are finding revised balance in those. So which is exactly the point where I would say, which balance will you take in the profit and loss account and balance sheet? The balance as per trial balance or the revised balance?
Okay, so you mean to say the adjustments, whatever we are able to see under example 17, it is nothing but it came as a late entry. If it could have been on time, then it could have been part of our journal entry, right?
Yes, exactly.
As it was like beyond the target date, so we have to like accommodate it somewhere. So we are accommodating either in trial balance or in the balance sheet. That is what we're trying to do.
Absolutely. And we are calculating the revised balances. So to answer to my question is, in the balance sheet and trading and profit and loss account, you will take the revised balances. This balance that we just calculated. Do you see that? 6,225 is the new balance for the furniture account. However, if you go to the trial balance that is given in the question, here the furniture is given as, can you see that amount?
Right.
7,250. You will not take the 7,250. You would rather take the 6,575. 525. Simply, I wanted to bring in this concept that when you have an adjustment, those entries are not yet posted. The trial balance has not been affected by those transactions. So what we do is we prepare the journal entries for those, and accordingly we take those effects in the respective ledgers like we did here, and we find out the revised balances, and we will consider that while preparing the balance sheet. Now we'll come to this.
Okay.
We'll come to this. This is just, I gave an example just to bring in the concept of what do we do with the adjustments. Normally you have another approach which actually Sir followed, and in fact in this example also they follow. Instead of preparing the ledger accounts, they go by add and less. That becomes actually very confusing, especially for the people who are not so familiar with the accounts.
Right.
So I would always recommend, and this is what is, I always do as well, even in my exams, wherever, whenever, I always prepare the ledger accounts instead of doing direct adjustment in the profit and loss account and balance sheet. If you can see, they have not prepared the ledger accounts, but I will recommend that we prepare these ledger accounts and we prepare the final balances. Ultimate effect is exactly same. We will see that how that effect is exactly same. We will see. Now
Okay,
that we have,
but the time
yes.
taken is more, right? When we are going to create
No, not at all. Not at all. It's actually easier once you practice a little bit more. This one is actually more confusing. Whether I should add, whether I should or less or deduct, that is very confusing. However, when you post the entries in the ledger, automatically that addition and deduction is done. You don't have to worry about that. That way you save a lot of time, because this
So
structure of ledger.
Posting
Yes.
to ledger. Sorry, Dheeraj. So posting to
No
ledger, we have to go through journal entry only, right?
Yes. So you will have to know these journal entries the moment you see the
All the steps.
adjustments. Yes, and I would recommend not to pass the journal entries, because passing the journal entry is just a waste of time. The moment you see the adjustment, you should know what is the adjustment entry that we are passing. What is the journal entry that we are passing? Then you can quickly prepare the ledger accounts. You can quickly prepare the ledger accounts, and accordingly you will find the revised balances. So I'll go through those one by one, no problem. And once we are done with that, I want to talk a little bit about opening stock. We had actually come across the opening stock, if you remember the other time, and I told I'll talk about this afterwards. Now, at the time of talking about opening stock, I'll first talk about the closing stock again. If you remember, I had brought in the concept of closing stock like this. So we have
from previous year, right?
No. I'll say. Give me 1 minute. Let me talk about it. Then we will discuss. So suppose I produced during the year 100 units, and it took me suppose 1,000 rupees to produce that much of units, the final product. During the year, I sold suppose 80 units for 1,500 rupees. So what is happening is I produced 100 units for 1,000 rupees. I sold 80 units for 1,500 rupees. Sami, what do you think profit that we have made during the year?
500.
Okay. You simply did 1,500 minus 1,000, right?
Right.
My question to you is this. You sold
and also
80,
we have
right?
inventory also. We also have an inventory.
Yes. How do you think that makes a difference? I'll tell you. I'll
Inventory
give you a hint.
always a dead
I'll
weight.
give you a hint. No. It's not. I'll give you a hint. I'll give you a hint. So if you have produced 100 units for 1,000 rupees, how much of money have you spent for 80 units?
800 rupees.
Perfect. So if 100 units are produced in 1,000 rupees, 80 units are produced in 800 rupees. So don't you think that the 1,500 should be compared with 800 rather than 1,000?
Right. 700 profit.
So it's actually 700.
Right.
So what we did was we actually calculated the value of closing stock here, which is coming as 1,000 minus 800, which is nothing but 200, right?
Okay.
And this 200, because we still have it, we deduct from the cost. So our revised cost is 800 instead of 1,000. Is that safe enough to say? So this is the
Okay.
closing stock concept that we have already discussed in the last thing. I wanted to bring in the concept of opening stock today. So similar way, in the same example, okay, forget about the closing stock. Forget about the closing stock for now. Suppose, and this sell value also I'll revise a little bit. Suppose we have produced 100 units during the year. We had beginning stock, and in the beginning of the year, we had a stock with us, which was
Inventory.
brought down
Inventory,
from the
right?
last year. Inventory,
Opening
yes.
stock means inventory, right?
Inventory only. Inventory in the beginning. Suppose we had 20 units, cost of which was again 200 only. So during the year, suppose we have sold 120 units. During the year, we have sold 120 units for how much? Suppose 1800. Now, how much of profit have we made?
So it has to be 120 minus 20. So it is like total we had produced only 100, like 100 units.
What
only,
is the
right?
profit? What is the profit? No, final profit. What is the profit?
It should be 800.
Okay,
Sorry,
800 you're saying.
800. Yeah, 800.
So which is you are determining by 1800 minus 1000, right?
Right.
Okay. Aswiti, any other answer than this?
No, I also think that is the.
Okay. Let me ask you a question then. How much of units have you sold?
120.
How much of the cost that you are comparing the revenue with, that is for how many units?
120 units, right? 1,800 rupees we earned from by selling 120 units.
No, but you are taking 1000, right?
Right.
1000
Yeah,
is
okay.
for how many units? 100 units, right?
100 units, right?
So 1800 is for 120
Okay,
units.
so okay.
1000 is for 100 units. How can you compare both? You have to compare with the whole stock, right? Make sense? Whatever product that we have sold during the year, cost of the whole product we have to compare. So we have to compare 1800 minus 1200, isn't it?
But we did not
Yes.
produce
Minus
it. It was already there, right? We did not produce it.
Yeah. So
But
last year we
it will
produced, right?
add up, right?
Yes. Exactly.
Yeah,
So
it
whole
will
purpose
add
of
up.
finding a profit, the whole purpose of finding a profit is to find the correct profit, right? So if I have sold 120 units as of today, if I have sold 120 units as of today, whatever cost that I have incurred for those 120 units, I'll have to compare, right? That's how you calculate the profit, isn't it?
Correct.
Yeah.
It's very easy to catch that way. It's very easy to catch that way because we have sold 120 units. We have to compare with 120 units only, not 100 units. Even though during the year we have produced, still we will consider the last year's cost because we have sold them this year. Does that make sense?
Right. Yeah.
Yeah.
Yeah, perfect. Now, if you remember closing stock, did it reduce the cost or increase the cost? Did it increase the cost or decrease the cost? Do you remember that?
It increased. It was 200 closing stock. So it
It
increased
decreased the
the
cost, right? It was 1000, then it became 800. It decreased the cost, right?
Right. It earlier cost was 200, right? Closing stock values.
Yes. Yes, and it was 1000 produced, and then we calculated the 800, right? So it reduced cost or decreased the cost, right? Here, do you see opening stock is increasing the cost or decreasing the cost?
It's increasing the cost, right?
Yes.
Because
Absolutely correct.
we already have.
Yes. So this is the concept. So when we have closing stock, it decreases the cost, and when we have opening stock, it increases the cost. Does that make sense?
Because closing stock is something like it's going to in inventory account.
Yes.
So that's the reason it's going to decrease my cost.
Yes. So can I say exactly opposite with profit? So closing stock increases the profit and opening stock decreases the profit, right?
Right.
Cost, if exactly opposite relation will be with the profit. So I'll again use this concept as well in a minute. Once we are done with that, let's go back to where we were last time. So we were actually going through item by item and we were posting those in the trading and profit and loss account. We had already done till sales. So just to be very quick, I have already prepared this. So I'll just show you what I have done here by comparing these two. So cells we have already posted to the trading and profit and loss account. So Sami, because I believe you have not gone through the last class, so I'll just repeat this. When we have a trial balance like this in a question, then we see whether that is a balance sheet item or a profit and loss item. How do we determine that? Through a simple chart here. So if it is a nominal account, it is a profit and loss account item. If it is a real or personal account, then it is a balance sheet item. Does that make sense?
Okay. Yeah.
Yes. And from the name of the account itself, we can determine whether it's an expense or income or an asset and liability. We will see that here. Okay. Now, let me go to the...
Yeah, I have a question in your previous slide.
Mhm.
There you have mentioned only the income and OI statement, other income or other expenses. What
Yeah.
about tax?
What about?
Tax. PA,
Which statement you are talking about? Which statement you are
PNL,
talking about?
PNL statement.
Okay. Here.
Tax also will be there, right? No, previous slide. You mentioned two of the concepts, right? Could you please go to here? Here
This
you
is the
had
one?
mentioned sheet one. Yeah, this is the one. Yeah.
Okay.
Here you had
Okay.
mentioned profit and loss statement.
Okay.
Profit
Yeah.
and loss. Yeah.
Yeah. Okay.
So here you had mentioned OI and OE, right? Other income and other expense. So where is the room for the tax?
No. This is not OI. No, this is not OE.
Okay.
So this is representing all the items that comes in the profit and loss account, including tax. Tax. So profit and loss account, in profit and loss account, whatever item is posted, that will be either an expense or an income. Okay. So tax is an actually expense. Income tax is an expense. So that expense will definitely be a nominal account. That's what I'm telling here. That expense will always be a nominal account, whether it's an expense or income. If it has a debit balance in the trial balance, then it is an expense. If it has a credit balance in the trial balance, then it's an income. It's a simple formula that I had given. So in using this formula, we determine whether these items go to the trading and profit and loss account, or it goes to the balance sheet. Does that make sense? So now we go to the bad debt reserve, the next item. So bad debt reserve is nothing but another name for provision for bad debt. However,
expense.
It is the no. It is the provision. It is the provision that was made last year. I'll repeat that. Bad debt reserve is just another name for provision for bad debt. However, which was made last year. Okay. So provision for bad debt. When we were discussing the entry we had here, if you remember, provision for bad debt. What did I tell? What the provision for bad debt is actually another name for?
Provision of
I told it is just another name for
bad debt, right?
No. Bad debt is an expense. Bad debt is separate. Do you see that? This is separate. And provision for bad debt is separate. Provision for bad debt represents the debtors, and we are striking off his name. So we are crediting him. We are hypothetically assuming, we have received the money back. That's what we are assuming, which is exactly we are crediting his account. And I told then also that it is treated as a liability account or a contra asset account. Do you remember that? Do you remember me telling that?
Might be I had to listen to that video. I had not.
No problem. So you haven't gone through those classes because Ashriti can relate to it very quickly, because we have actually discussed this concept 4 times now, including today. So the concept of bad debt and provision for bad debt. So I wanted to repeat this because this is one of the critical points in which a teacher can play a lot. And now that we are clear about that, so bad debt, provision for bad debt is nothing but a balance sheet item. Now, what we will do is, we have already made a lot of posting here and there. I'll go to the other place where I have already done it. Here, because we have the bad debt reserves relating adjustments, one adjustment related to the bad debt reserve. Therefore, what I'll do is I'll make a ledger account for it. Do you see the ledger account here? So the balance that is given 5,200 is a credit balance, because liability will always be a credit balance. So which side will it be posted in? Debit side or credit side? The buy balance or to balance brought down?
Credit side.
Credit side. The same concept that I told. If it is a credit balance, then brought down will be on the credit side. If it is a debit balance, the drawdown will be in the debit side. So I've already posted it in the credit side. Now we will see there was one entry which was affecting the provision for bad debt. Okay, we just saw that. Do you see that entry here? Now, if I post this entry in that ledger, which side it will be posted in?
The lesser side to make the adjustment. Hello.
Yeah. Go ahead.
At the lesser side to make the adjustment so that the asset and liability is at the same level.
No. One second. So let me, no, the question that I asked was very simply, this is the journal entry, okay? This is the journal entry. And we want to post this journal entry in the ledger. Which side it will be posted in?
Right hand side.
Credit side.
Now, to answer that question, if you remember, the formula was, is that account debited or credited here?
Bad debt reserve is provision for bad debt, right? So that is credited only.
Okay, it is being credited here, right? It is being credited here.
Yeah.
Now, will it be posted in the debit side or credit side of this account?
Credit side, because that's a credit balance.
Credit side, yes, exactly. You are absolutely right. This will be posted in the credit side.
Okay.
Now, here, however, there is something else happening. I'll tell you, through another example. Let me do this. Suppose you have a balance of, I would say, give me 1 second. Suppose you have a balance of 5,200 in a particular account. Forget about the name of the account, okay? Forget about the name of the account. So okay. This is the basically balance that you have as of today. Then you get to know that balance is actually wrong. Suppose you get to know that balance is actually wrong. Let me say this is a credit balance. Forget about the account name. Suppose say this is a credit balance. Then you get to know that the balance is actually wrong. Actual credit balance is suppose 2745, I would say 2745, So what do you think we should do for it? Or do you think we should do something about it? I'll just revise this, 2485. So very simply what I'm saying is, right? Yes, we should reduce it. So for reducing it, how to do it? We will have to pass an entry, isn't it? We will have to pass an entry. Now, in order to pass an entry, we have to determine what other aspects should we record it with, right? Because entry will always have two accounts in it. One account, definitely this account. So now I'm putting in the account name. Okay, this is nothing but provision, reserve or provision, as the case may be, whatever you can call it, reserve for bad debt account. And this is the reserve for bad debt account.
Okay.
Now, what I'm asking now is, we know that the reserve for bad debt has reduced from 5,200 to 2,485. What is the other aspect that it affects? If we are going to reduce it, I will convert it to provision.
It will affect the bad debt. The debit side.
Do you remember somewhere in the beginning, I talked about how the provision, when it is created, it is affecting the profit. When it will reduce, will affect profit also. When we are determining from 5,200,
so that will be treated as an income?
It is an income. Yes, exactly. Do you remember that cassette? Can you relate to it?
Okay.
Sami?
Yes.
So it will go to the profit and loss account only. Do you get the point?
Yeah.
So what
the difference is going to profit and loss account.
Difference is going to profit and loss account. Yes. Okay. So if I'll show you what is happening here is, the balance is 2485. The balance is 2485. And earlier we had 5,200. So the differential amount is going to profit and loss account. So the entry is provision for bad debt account debit to profit and loss account. Do you see that? Provision for bad debt is reduced and the income is recorded. Now we have the revised balance of provision for bad debt, which is 2,485, right? We had earlier balance of here 5,200. However, when we calculated, we got the revised balance of 2,485. So where do we post that? Profit and loss account or asset balance sheet? No, profit and loss account or balance sheet? That's my first question.
It should be in balance sheet because it's a loss, right?
No. It is a liability. I told you, no, it is a liability.
Yeah,
That's why it will be in the balance sheet. Is that clear, Sudhi?
It's a bit confusing for me. I can't relate it very quickly.
No
Okay.
problem. I'll
5,200 was the previous before adjustment. Now post adjustment it has been become 2,485. So it's like a loss, right? It's not a profit and loss, but it's a loss. So losses are always like captured in liabilities. That's correct, right?
Okay.
I'll relate to it a little bit more clearly. Give me one second.
It's actually like we have gained an income, no? We have made a wrong entry, but it was actually other way around.
You are answering the wrong question. I'll ask you the question. We are determining the provision for bad debt should go to the profit and loss account or balance sheet. It's a simple question. Okay, provision for bad debt goes to the profit and loss account or balance sheet. Right now, if you remember this entry, it is a personal account. It represents whom? The debtors, right? Now we are striking out because hypothetically we are saying that they have given us the money, right?
Yes.
Now, if you see, is it an asset or is it a liability now? Because it's a personal account, definitely it will be either asset or liability, right? In this concept. Now, is the provision for, is it asset or liability? It is definitely a liability. And I told another concept, it can be a contra asset. So whatever is a liability can be a contra asset as well. So opposite of asset. Does that make sense?
Yeah.
Yeah, perfect. Now, what I'll do is
the liability we are posting to balance sheet is what
balance sheet. However, because the reason for which I'm introducing the concept of contra asset and contra liability is because instead of showing the provision in the liability side, we deduct it from the debtors. Both will result the same thing, right?
Yes. This one we did last time, right? Same concept.
Yes, exactly. Yes.
Okay.
So why are we doing it? Because that's the law. That's the better way to put it. So if I say we have debtors of 49,700, however, we are doubtful that we will receive the money for the amount of 2,485. So the better way to present it is to deduct both of them and show the final balance in the balance sheet, isn't it? So that is the reason we post it not as a liability, rather as a contra asset, as a deduction from the debtors. I'll repeat this concept of contra asset again. That's no worries, but that's one. Now,
what if we post it on other side as a positive
the
value?
balance sheet will match. The balance sheet will match.
Contradict?
However, the balance sheet will match. However, the mark will be deducted. You get that?
Okay.
Because it is supposed to be deducted from the data. That's a kind of law. And similarly, we have furniture and depreciation. Can you see that? So when you have furniture and then you have a depreciation of certain amount, instead of showing when we post the entry, then we actually credit the furniture name. So ultimately that is getting deducted from there as well. So we don't show the liability account on the other side. Instead, we are deducting that from here. Now, similarly, if you remember the drawings account as well, I'll revise that concept. If capital account is a liability, then drawings account is exactly opposite, which is asset, right? If you remember that concept. So, instead of showing that as a concept asset, we are now deducting it from capital because that is the better way of putting it. So we are saying, even though owner has invested 10,000 rupees in our organization, however, he has withdrawn 4,452. So we will show them together. So we will deduct it from the capital. So there are 3-4 items like this. I'll repeat it again and again. We'll remember that. Don't worry about it. But just remember there is no difference in showing it whether as a liability or a contra asset, or the other way around, asset or a contra asset, or a contra liability. Sorry. Does that make sense?
Yeah. So you are basically grouping all these things together.
Yes. Perfect. Now let's very quickly go to, I'll maybe try to quickly finish it in 5 or 8 minutes, whatever I have, next things I have in mind. So next we have creditors. Creditors, is it a income, expense, asset, or liability?
It's income.
This is
It's an income.
Let me go to that chart here.
Profit. It's a profit and loss. It's a profit and loss account.
Now determine what type of account it is first. Is it a nominal account, real account, or personal account?
personal account.
Creditor is a personal account, right?
Yeah.
Sami, are you familiar with how to determine the real personal and nominal account? Should I repeat that?
Yeah. In the first class, you said like.
Is it a person? Is it an
entity or representative? It's a personal account.
Personal account.
If you can, I feel an object
feel and touch,
or I can touch, then it's a real account.
Real account.
Otherwise, if I'm not able to feel or touch, then it's nominal account. Like depreciation,
so here,
salary.
Creditors here creditors are persons, right?
Okay.
Yeah. So definitely it's a balance sheet item because real or personal account. So real or personal account will be balance sheet. Now let me ask you: is it asset or is it liability?
Liability.
Definitely liability. Creditors are some people to whom you have to pay money, right?
Okay.
Yeah.
And debitors, they're also part of balance sheet because they're also
yes, and they'll be asset just like that.
Okay.
Make sense? So because of that only, if you can see, I have already posted the creditors in the liability side here, 30,326. Now let's quickly go to bills payable. Bills payable. Is it an expense? Is it an income? Is it an asset? Is it a liability? No. I'll just, because you are not familiar with this, let me just quickly tell you. Give me 1 second. Yeah, bills payable is actually another name for the creditors only. Bills payable is just another name for creditors only. There are some technical differences between creditors and bills payable. I'm not covering that. Okay, I'm just saying very simply, bills payable name is given to the creditors only. So just like creditors, there will be also liabilities. Does that make sense?
So it's like rent payable.
Yes, it is a payable.
Same as
we
that.
have to pay.
Yeah,
yes,
not rent paid, rent payable. Okay.
Yes. You can relate with that concept actually. Yes, absolutely amazing. Now that we have determined that, let's go to outstanding wages. Let me first of all tell you, outstanding wages represents the people to whom we have to pay the wages. Outstanding wages represents the people to whom we have to pay the wages. Now tell me, is it a expense? Is it an income? Is it asset? Is it a liability?
It's an expense. For the
liability
company.
only, right? It's
liability.
As creditors.
Yeah, Sami, better way to do it is to go, remember, imagine this chart. Okay. Now I just told outstanding wages represents the persons to whom we have to pay the wages. So definitely it's a personal account, right?
Okay.
So it will be an asset or liability. If it is outstanding wages, that means we have to pay the wages. That means it's a liability. So Aswati was right. Make sense, Sami?
Yeah.
So if you can see 2000, I have already posted in the liability side here. Then we go to outstanding salaries. Similar concept, exactly similar as we had in the outstanding wages. Is it now I'll ask you, is it an income? Is it an expense? Is it an asset? Is it a liability?
It's an asset.
Same concept. Just like I said, outstanding. Yes, liability only. So I'll repeat that, no problem.
So what is difference between these two terms, wages and salary? It's both same only.
Yeah, exactly same, just that the people are different. So wages are told especially for the laborers, those factory workers, people like that. However, salary is specially termed with the people who work in the administrative office. So what we receive, by doing our work is called as salary. However, the person who is working in the, factory, whatever he gets is called wage, right? Because normally those are paid in a daily basis and stuff like that.
Yeah.
So, but nature is exactly same. Nature is, you don't have to remember the difference. But just the nature is exactly same. So I'll repeat the concept of outstanding again for Sami. Outstanding wages, I told, it represents the people to whom we have to pay the wages. Exactly in the similar concept, outstanding salary represents the people to whom we have to pay the salaries. So meaning thereby it's a personal account. So it will be either an asset or a liability in the same concept through the exactly same chart.
I got confused because like when you said in the first class, the thing is like all salaries, your depreciation amount, everything will be your nominal account.
Yes, right? You're right. However, it is not salary, right? There is another prefix to the name. There is something called outstanding salary. That makes a world of difference. It changes the scenario altogether. Yeah, no problem. It's okay. So whenever outstanding concept is there, we will assume it, we will take it like this. So it represents the people to whom we have to pay that amount. We have to pay the salary, we have to pay the wages. Meaning thereby it's a personal account, meaning thereby it's a balance sheet item, meaning thereby it is because we have to pay, that's why it's a liability. If you can see, I've already posted this as well, 700 in the liability side. Now let's come to capital. Now we have discussed so many times. Is it an income? Is it an asset? Is it a expense? Is it an asset? Is it a liability?
It's a liability.
Perfect. If you can see, I've already posted the capital as well. Now, what we do is, because I have already given you the example of depreciation, how we did, post the entry and found out the revised balance. So I'll repeat that and we'll go to those few adjustment entries and we will stop right there. So what we did was, as I have repeated again and again, adjustments are such journal entries which have not been taken into consideration at the time of preparing the trial balance. So because of that, whatever account is getting affected by those journal entries, we have to calculate the revised balance for that. I'll repeat that concept. Because the adjustments are such of nature that those have not been taken into consideration at the time of preparing the trial balance, we have to take those effects, or we have to calculate the revised balance of the accounts which are getting affected by those journal entries. Now, what do I mean by that? Suppose here, charged interest loan of this, we have already recorded the entry for this, interest receivable to interest account, interest receivable to interest account. Now we have to calculate the revised balance of these accounts because these accounts are getting affected by this entry. This is what I mean by that. However, if you will see, we don't have those entries here, accounts here. Interest or interest receivable, we don't have anywhere. So if we don't have, we will create another. If we don't have, we will create another. Now let me ask you, interest account is getting credited, right? By 100 rupees. Now, can I say interest account will have a credit balance of 100 rupees?
Yeah.
Yes.
Aswiti? Yeah. So because I'm now skipping the ledger part. Can you see that? I'm skipping the ledger part. Can you, because you can relate to it. So interest account will have a credit balance of 100 rupees. So interest account is an expense account, income account, or asset account, or a liability account.
Interest is income, right? We are receiving the interest.
Absolutely. Here we are receiving the income. So